Hi, good morning. Welcome to Friday's live session. I hope you're doing well. Um, so, this week has been a consolidation week for the dollar index, and therefore has made it, I think, a little bit challenging for most people to trade this week. So, if you found this week to be challenging, just know that it's normal, but the market condition doesn't remain like this. We will get some movement probably next week, so relax. If you kind of struggle during the course of the week, just know it's normal, and learn from whatever mistakes that you did this week, and then take that experience, right? Probably put them in a journal if you have one. Write whatever you went through and what you could have done differently, and then next time, whenever we have this kind of market condition again, you actually know what to do. So whatever feeling that you had, if you took a trade, you probably should have taken your profit early. Write all of that stuff down, and then take that experience, so that next time, because these conditions, they are gonna come again. All right, it's a condition that happens almost every year. There are times of the year that it happens. June, the last 2 weeks of June the third week and the fourth week of June is always like this. And then we also have January. I think the first 2 weeks of January is also like that. And then I think December, the last 2 weeks. So the last 2 weeks of December and the first 2 weeks of January is almost like this, a market condition. And then you have the obviously the June, probably July. We might get 1 week where price stays in a consolidation. That will also depend on the kind of pair that you trade. So whatever experience that you went through this week, take that on board, and then the next time that we experience that condition, right, you can know how to navigate in this condition, right? The best way to trade is actually selling above highs and buying below lows. All right, so any pair that you do trade, when we get into this kind of market condition, just try your best to not look for trending market, or don't look for trending conditions. Look for previous days highs and previous days lows, and that's where your trade ideas are going to fall. You wait for price to take the previous day high or previous day's low, and then you go the opposing direction. And then when you're in the trade, you kind of want to pay yourself quite early, because sometimes price can come back and pretend as if it's gonna go and take you out, and that can be a little bit, if you're not mentally strong, it can cause you to close your trade prematurely. So when you get a trade in this condition, try to make sure that you take profit early. Okay. I did put a title for today, backtesting breakers, right? Because of the condition in the market right now, it's not favorable for trending conditions, right? And there are no, in my opinion, trades going on. So I'm just gonna show you what you can do in this condition, and then actually let me show you the trades that I'm currently looking at. So I'm on the yen pairs only. I'm trading exclusively the yen pairs and Aussie New Zealand. I've been in it since Tuesday. Okay, so Aussie New Zealand, I think at the beginning of the week I told you where I'm targeting, right? And I was anticipating the high to form. It did form here. I think we met on Wednesday and I told you I went short here and I'm expecting price to go for this low. So I'm still in that trade, expecting price to run for that. New Zealand yen, I took some trade in here and I'm looking for price to trade down here. Aussie, same thing. I'm looking for price to close in this gap. Pound yen, we got a trade yesterday and I'm looking for this equal low as the first objective, and then I want to see price down here, but this is a breaker, so I'm gonna be scaling out there. Euro yen, I managed to get something in here and I was expecting them to run aggressively below this low, but you know, it has rejected. I will still look for price to take out that low and trade to 50% of this range. And then CAD yen, off from this imbalance, I'm looking for price to trade down here. So this morning, that's what I'm looking for. I think if you look, we have Monday, Tuesday, we form high and then we break down on Thursday, taking out Tuesday's opening price. I'm expecting it to continue going down, right? And then finally Swiss yen, yesterday we got a sniper entry right there, right? And this is what I was going to show you guys to backtest. Okay, so pretty much, you know, these are all the trades that I'm monitoring, and apart from these I am not looking at anything else. So if you are trading anything and you want me to have a look for you, I will do that, but you know, these are all the trades that I am currently personally riding. Okay, so let's go back to dollar index and let me use this pair here. Actually it's the dollar CAD. So in this condition, right, this is what you want to be doing. You want to make sure you have your previous day's high and low marked out on any pair that you trade when we hit this condition. So you know, I've given you roughly when we will have these kind of conditions. I'm gonna repeat that again, so if you want to write them down, when we hit June, the third week of June and the fourth week of June, there's a high probability we are gonna get this kind of price action. And I think it's this third week of July, the first week of July, there is going to be manipulation. Unless you understand the manipulation, then obviously you will get caught off guard. But the third week of July, you will get this kind of market condition again, And then December, last 2 weeks of December, you are gonna get this kind of price action, and then the first 2 weeks of January, you're gonna get this kind of price action. Okay, so it's important you know how to navigate in these conditions. Okay, so what do you do in this condition? All you have to do is highlight your previous day's highs and lows. Okay, that's all you have to do, and you're gonna trade only after liquidity has been taken. Okay, you're gonna trade after liquidity has been taken. So for example, this is a trade that our private group managed to get this week. In here, that was on Wednesday. So Wednesday, New York session, I'm gonna go in here. Okay, Wednesday New York session, we saw price take out that previous day's high, and then it broke market structure during the New York session. So we managed to get a breaker entry here, right? Breaker entry here to take price down into this range here, right? How far were we expecting? I was expecting this low to be taken, but it didn't quite get there. So depending on how you put your stop loss, you're gonna get yourself a nice risk to reward. But for those of you in the private group, we look for optimal trade entry. So you measure the range, and then you look for OTE as our target. The reason we look for OTE is because price can get to OTE and come back up, or it can go here. So we look for OTE as the target. All right. And that's just one day, right? In this condition, just one day trading. Okay. There was another one on euro. Let's go to the daily. So this one was not shared because I watch price on a constant basis every day. So I saw this play out. So you drop down to the 15. Okay, right here. That's that previous day's low, Monday's low taken. Right, and then price runs up, breaks market structure. Okay, and if you measure this high, if you measure this high to that low, optimal trade entry is right there. So in here, all right, you can get a trade to take you up to optimal trade entry. And after price went above that high on the 5-minute time frame, there's a break in market structure, and then you sell short again. Why? Because the market is not going to trend. Okay, so the fact that the market is not going to trend, it gives you the opportunity to trade both sides of the market and not expect a trending condition. All right. Another example was on this pair yesterday. Previous day's high, price runs that, and then it breaks down, pull back, you're gonna measure the range and then target OTE. All right, let's go back to gold. Gold did amazing, and if it did it twice, you can see I still have my markings on there. So that was the previous day high. Price takes it. We actually took this live during our live session on Wednesday in the afternoon. Okay, and then price reverse into OTE. So 1 hour auto blocking here, and then yesterday price run up. So yesterday I was actually anticipating them to go and take out this high again and then drop down to come and attack this low, but it couldn't take out the high, so I didn't participate in this. But we saw this happen live. Okay, I think if you're looking at today, we have similar scenario right now where previous day's low has been taken, and there has been a break in market structure. So where do we think price is gonna go? Measure the range, and then we target optimal trade entry. So I'll target this imbalance in here, right, with a potential buy maybe in here, so to get an entry. Now entry, you can use any entry criteria that you feel comfortable. Okay, you trade it based on what you understand. When we have the market showing a direction, trading it will be on a personal level what you prefer. Okay, so you can use OTE, you can use breakers, you can use auto blocks, you can use gaps. That will be entirely up to you. So whichever one you feel comfortable using, that's the one you use to trade up in here. All right, and oil also did something like that on Wednesday. Now this one, admittedly, I did not get an entry in here. That was a previous day's high taken. I didn't get an entry to go to my target, which was the one I gave you on Monday, this low here. How did you define that euro was not going to trend on Wednesday? Because we are in a consolidation environment. The weekly profile for this week was going to be a consolidation, so it's a bit of experience thing, where first of all, if you look at the dollar index, right, it's gonna give you why it was not going to trend, because we are stuck inside this candle. Okay, so this candle here, we are stuck inside that. Notice that the high and low is still intact. So the fact that the high and low is still intact means that we are not going to trend. We should have, by 20th, Monday, we should have expanded down because of price closing bearish, right? We should have expanded down, but that wasn't the case. Okay, we should have expanded down. That wasn't the case. So it gave the logic that this week was going to be a consolidation week. Does it make sense? Hopefully it does. Okay, so that's why I thought that this week was going to be a consolidation week. Let's go on to another pair that did something similar. S&P 500. Previous days low taken here. It took both high and low. So previous days high taken, and then previous days low taken. So we started the day with price going to take out the low first. Okay, we opened and then price went and took out the low and then broke market structure, and then it went for the high and then rejected back inside the range. So you can see that the best trading style in this condition, right, is to trade not trending, but when previous days highs and low gets taken. So let's say we hit one of these periods, right? How do you want to set up yourself for the week? You're gonna sit and chill most of the time. Know that the condition is not right for trending, so sit down and wait. But as you're waiting, have your previous day's highs and low marked out. Okay, as you're waiting, have your previous day's low, high and low marked out, and then when you see price attacking the high or low, that's when you get yourself ready to engage. Okay, when you see price attacking the high or low, that's when you get yourself ready to engage. So pretty much sit, wait, and then once you see that event unfolding, then you go in and you start looking for trade ideas. If you don't do that and you're gonna trade like normal market condition, you're gonna be looking for, okay, an order block, we're gonna be expecting the daily candle to be expanding up. You're gonna get disappointed because price is gonna chop you into pieces. Okay, so make sure that you have this maybe written down, or whatever experience that you went through this week, and just take that experience and because the market is gonna come back with similar conditions again. All right, so that's part one. Let's move on to part two. Part two, it will be simple. I want you to backtest breakers. All right, so I'm showing you high probability breakers. So let's jump into it. So the way I like to see my breakers is first of all, price has to go for some form of a higher time frame level. Now this higher time frame level can be anything, right? Or down here, high time frame level, it doesn't matter. It can be auto block, it can be fair value gap, it can be anything, right? Now most of you watching, you know this by now. Okay, so I don't have to go through whether you should be looking at auto block. It does not matter. It's just price action. So the high time frame level is where you're gonna key off from. Without the high time frame level, the breaker is not going to work. Even if it does work, it's not going to be as dynamic as you want it to be. Okay, without the high time frame level, your breaker is not going to be as dynamic as you want it to be. So make sure that you have the high time frame level as the reason for looking for the breaker. Okay, make sure that the high time frame level is the reason you're looking for the breaker. Okay, so don't jump onto the screen and then start looking for this pattern here for the sake of the pattern. All right, don't jump into the onto the chart and then think, okay, because I understand that price made a high. I don't know what's wrong with my mouse here. It's weird, my drawing is not doing it properly. Okay, right, not because now I can draw. How do I get rid of it? There you go. Okay, so do not think that because price made a high and then broke down and is pulling back, because of that, you have a high probability breaker. It doesn't work like that. As I'm saying, there has to be some form of a high time frame level here. Alright, so when you have that high time frame level, then this becomes a high probability breaker. Okay, so how do you want to see the breakers? Now, this is my personal way of looking at it. When price is heading towards the high time frame level, okay, I personally want to see this high close to that high. Okay, I want to see this high close to the high. Now, why do I want to see that? Because when price makes this low and then runs up, it hits the high time frame and high time frame level, and then it breaks down. This area this whole area, okay, this whole area has been worked. Okay, it's gone down, it's gone up, and then it's gone down again. So that area has been worked. Now, if you don't understand what I mean by worked, it means price has traded several times in here. Okay, price has traded several times in there. Therefore, I do not want to see, or price is generally going to struggle to go up. Okay, price is going to struggle to go up, especially if this movement down here, if it's aggressive. Okay, if it's one, maybe two candles, or maybe one candle or three candles. I don't want to see 15 candles going down to take out this low. Okay, you want to see, after price hits the high time frame level, 2-3 candles, but the last one that takes out this one should be an aggressive one. And then once you see that, then you can use that as a breaker and then sell short. And when you do sell short, maybe you will see that there's a gap or there's a void. Okay, you're gonna find the beginning of that gap or that void, and that's where you're gonna place your stop loss. So if, let's say, the last up candles here, sorry, the last down candles here. Oh dear. Trying to draw a candle, but it's not allowing me. But you get what I mean, right? The up, the down candles here, and then we have another down candle here. Okay, and then it breaks this low. If there is 3 candles, you will see that there will be, let me see if I can manage to draw this. Nah, it's not allowing me. And but you know, let me see if I can use something else to draw. It's okay. Try. I'll show you examples. I want you to understand it conceptually before I show you examples. Right. So you might get one candle, and then one candle break it, or you might get one candle and then one candle breaks it. You're gonna find the beginning of the last but one. So if this is the one that breaks this low, the previous one, you put your stop loss above that. Okay, and then you anticipate price going down. Now, regarding your question, what is your higher time frame? The higher time frame is going to be depending on what kind of trader you are. So this can be H4, H4 OB, or H4 gap, or H4 high, or daily OB, daily gap, or daily high. Okay, or you can go for weekly OB, weekly gap, or weekly high. Okay, it can be any of these. It's going to depend on what is present whilst you are in front of the screen. And then the same thing will be for the opposing direction. If you are looking for a breaker on the downside, then everything instead of high will be low, low, low. Okay, so that's what you're gonna use to anticipate your reversal, and once you get the reversal, you're gonna look for the breaker to form. Okay, and the opposite is the same. You just flip it as price is trading down. Okay, like this. Okay, and then you hunt for the breaker and you look for price to go up. All right, so let me go in and show you some examples so you can see what I'm talking about. This one here, this trade that you're seeing right now, is an example. This is a previous day's high, and then price smashed through that. Okay, notice that we have this, right? Okay, so we have high, low, high, high, break, breaker, hits it, and then down it goes. That, in my opinion, is the highest probability breaker. You take it here, you look for targets to the downside. All right. There was an example on this one as well. Let's go to the H4. So we had same thing here. That was a weekly high. Price takes that, breaks down, down candle, so it's back into it. The nearest high was here, so stop loss goes above that, and then you look for continuation. Okay. Euroyen. This one has not traded to it yet, but if it does, that will be another potential sell as well. So you have this high and low, high, break, pull back, and then you expect price to go down. Why? Previous day's high. All right. GJ. GJ did not provide that. Which one did? Cardian. I think also on the one there. I think 15 minutes. I did back test it. There. That was the entry there. This was the previous week high in here. Not the best one, but this one is a little bit challenging if you trade this one. Okay. Let's go to oil. 1 hour time frame. Yeah, 15. 1 hour 15 is here. So we have 1, 2, 3, 4, 5. Previous day's high. Okay, over here. And price breaks down. Come back to the breaker, and then down it went. Okay. What else did I see? I'm actually anticipating one on New Zealand maybe this afternoon. So I've set my alert. This is a previous day's high. Okay. So we have, if price does something like this, okay, something like that. So that's your previous day's high, and then you anticipate something like this. Okay. Aussie did something like that. What day did it do it? It wasn't a preview. It was a session high. I don't recommend session highs. Okay, this was Asian session high. I don't recommend session highs yet. Right. right? Use the previous day's highs and lows. Those are going to be your highest probability. Okay. What else? Let's go to Eurocat. Okay. I was actually looking at this yesterday. Let's go to the hourly chart here. Okay, that's the previous day's high. Price runs that and breaks down. So we have 1, 2, 3, 4, down and down again. Okay, so that same area gave you 2 trades targeting this low. All right. I think Euro, no, GBP, AUD also gave something like that. What was it? It was a buy. Previous day's low. Wednesday's low taken. Let me go to the 15. Here. We have 1. This one. I have to go through the time frame to show you. I think 20 minutes time frame will show you better. Basically, this is the previous day's low, okay, and it gets taken to the 20 minutes chart. Okay, this one might look better. So, and then off it went. What else? Dollar CAD. Let me look at dollar CAD because I think I was expecting this morning. I've actually closed the previous day's high here. It's a daily high, and we have one, two, three, four down here. That's what I was looking for. Okay. Right. So I've shown you. I've given you lots of examples. Now you go and backtest it. All right. So what you're looking for, it's very simple. The higher time frame level has to be there. Right, the higher time frame level has to be there, and then once you have your higher time frame level, you can then drop down and then anticipate that breaker forming. The best one is going to be the one that has the high very close to the previous high, and you're gonna highlight that low and up. Okay, this low, the first high, not this one, the first one, the low of that high, you're gonna highlight that one and up, and price should not come anywhere above that 50%. Okay, price should not come here. That's provided if this high is close to that. If it's not, let's say the high is down here and then they make a high there and then break down, then there will be a probability price can come a little bit higher. Okay. So, any question regarding this? Any question regarding this? Hopefully next week the market will come back to its senses, and then we can do some no more trading. This week the market is not in its right frame of mind, so last one before I disconnect. Indices, I'm expecting them to take out this high on the S&P 500. I'm expecting them to take out 3838. Let's see if Nasdaq has taken that, so no problem. This one is also yet to take out that high, so I'm looking for these two to go and attack that high. So maybe New York session, I was thinking maybe this session, London session, they're gonna do that from this order block here. That's why I have that highlighted. Right, I want to see them take out that high using this order block here. Maybe New York session they might do it, maybe they might do it down. Swiss yen is pulling back. That's okay. Now I've looked at the futures market. Swiss yen is trading at the previous month high. Okay, it's trading at the previous month high. So if you look at the weekly range, we started this week and price just went up. So there might be a maybe a Friday reversal from that high. The yen has this bullish order block here, which I wanted them to hit it and then go up. We have H4 imbalance up in here. I think that's where it's gonna go, so it's just a matter of time. And then on the CAD, we have an H4 order block here, unless they go above it. Okay, then obviously then I'm wrong, but we do have H4 order block here, so I think it will struggle to go up. So on the CAD yen, right, it can trade inside this range here, this high to this low, and that's okay, right? This high to this low, that's okay. And then you'll be expecting price to go down again. If they go above that high, then obviously I'm wrong. But looking at the futures market right now, that's the narrative that I'm seeing. So you might get this one to reject, and then this one to hold, but maybe they'll do it during the New York session as usual. So maybe you come back in the New York session and then look at it. Swiss yen, same thing. This is the range, this high to this low. Okay, so as long as we are inside that range, all this is just fluff. If you go above this high, then I'm wrong. Then you just have to take it as it is. It's a cost of doing business. But as long as this high is intact, I'm looking for a run for this low. Okay. I think it's just the yen pulling back right here. So just stay patient and don't do anything, and then maybe New York session. I think it will move during the New York session. Now, if you do a little bit of back testing, right, you are going to see that the yen and the dollar index a little bit correlated. Now, what do I mean by a little bit correlated? When you see dollar going up, okay, when you see dollar going up, mostly check the yen, because fundamentally, if we do have, I think it's a risk of conditions. When we have risk of, meaning investors are pulling out from taking risk in the market and going for safe haven asset classes, right? That's a risk of condition. Whenever we have that kind of condition, right, you want to check dollar index. If dollar index is going up, look at the yen. Most of the time you will see the yen also going up. When you see that, that's a high probability trading environment to go in and sell the yen pairs. Okay, so in dollar going up, if you do see the yen, I do have two Swiss in here. Say right now, right, dollar is going down. Okay, at some point you will see the dollar going up. So for example, here, from here and up, that was 22nd. So from 22nd till here, notice that the dollar was going up, yen was also going up. If you go onto your yen pairs, from 22nd, notice the movement down. Okay, from 22nd, notice the movement down. So when we have risk off scenario and you see dollar going up and you see yen also trading at, because you want to anticipate it, right? So you see yen trading at a discount, then anticipate yen and dollar, both of them going up, to offer you some incredible bullish runs on the bearish runs on the yen pairs. Okay, so that's my gift for you guys, free of charge, of course. So any question? Any questions, guys? Okay, if there's no question, then I'm gonna bring this session to an end. Hopefully you got something out of it. I'll touch base with you guys on Monday. Hopefully next week the market will ease itself. We are going into July next week. Next week Friday is 1st July. Let me double check if there's NFP. Okay, NFP will be the following week, this 8th of on the 8th of July. All right, so that's fine. Next week will be a normal week. So there's a lot of high impact news from medium impact news from Monday up to Friday. So there will be movement going into next week. All right. This week there was let's see this week what we had. Not much in terms of high impact news, and the high impact news were not high impact in a way because they were all just fed, and then it was all the governors speaking, no real high impact news. So next week we will get some high impact news, especially Tuesday, consumers confidence, and then Thursday we have the CPI, and then Friday we have the PMI. So lots of movement that can unfold next week. So that's it from me, guys. I'm gonna go and find something to do. I'll touch base with you next week. All right. Until then, stay safe and take care.